Today is March 29, 10:12 a.m. And we saw some unusual options on Delta Airlines. That's ticker symbol DAL. And we wanted to let everybody know about it and interpret it and then show you our trade with it because the trade that we saw that these large institutions put on was very large. It requires a lot of capital, and most of our subscribers don't have that. So we constructed a trade that you can maybe consider in your trading strategies. So without further ado, let's get right into the trade. So what we saw first is that technically we always want to look at where we are on the charts. So at the beginning of the year, we're around this level here, which is about $32. And that's also sort of that same range, right? So just about in March 24, we bounced right here. And for the past 3 trading days, including today, it has bounced. And so it looks like it could reverse from here. But again, maybe not. So like here, it bounced, but then it came back down. So we want to be careful with that. So what we saw on the unusual options, we want to show everybody. Keep in mind the IV's at 27%, and here we are. So just at 9:40, this was just about 30 minutes ago, and also 9:36. These large trades here for the same strike prices, just different quantities here. You could see here, this is the 27 puts strike price, and then the 35 strike price calls. All the same here. So this lot here looks to be the same institution who put it on. It totals to about 13,000 contracts. And so if you recall, selling these 27 puts here requires, or is basically telling the broker that you're willing to buy 100 shares of Delta for $27, which requires $2,700. So if you were to multiply that by the 13,000 contracts, you'll see that you require $35 million just to put on this. So this large institution put in quite a bit to put on this trade. It is a bullish position, and you'll see here when we analyze it together, this is the trade right here. It is a bullish trade. As the price goes up, the profits goes up. This is the profit loss diagram. And if it drops, it's quite minimal, their losses, because right at this point, the theta will be positive and start moving up, so to reduce their loss. So if we look at the Greeks on this, you'll see here that it is a positive delta trade, and the theta is minimal, kind of negative 0.76, and it's also a positive vega. So gamma is also positive. So the trade that we developed for this is a diagonal trade, and you'll see here it is the Greeks for this is also close to zero, but this is even better because it's positive, it's not negative. And so we don't have any time decay, so we like this trade. It's also a positive vega trade, which helps if the stock crashes and it becomes more volatile, then this is beneficial for the trade. The delta is also positive, okay? And the gamma is negative. We don't have time to explain gamma, but it is something you can look up. That's the only difference between our trades. And so if we look at the option chain together, you'll see here we have our positions on. It's the diagonal trade. This is the unusual options we saw. I guess they're at 17,000 already, the volume. So what they did was they bought the 35 call strikes here, right? And then they had sold this 27 puts, right? And so what we're doing is instead of selling these 27 strike puts, which requires that 2,700 buying power, we're not going to do that. So we constructed the diagonal trade instead, which doesn't require selling a put. So that's the difference. And you'll see that we like this because while they're buying all these strike price 35s, we're actually selling it instead. So taking advantage of that high volatility at the strike price, we're going to sell it instead of buying it when everybody's there's all these contracts rushing in to buy it, so it's bidding up that price up. So we want to be a seller of that instead. And you'll see here we purchased our strike price at the 32s. So you'll see here we bought our 32 strikes here. Currently there's 292 contracts, as you'll see. So we also got quite a few to make sure that we are also bullish, so that this also profits as it goes up. So that's our trade that you can consider as time goes on. It is expiring in May. As time goes on, the theta will be more positive as it shifts towards that higher profit curve. And so if this trade starts to go against us and goes down, we can consider cutting our losses if it's not playing out the way we analyzed it to be. So if you like this video, please give us a like and subscribe, and then make sure to hit that bell icon so you'll be notified whenever we see these unusual options. So we think this is going to go up. There is until May, and make sure, keep in mind, there is earnings in April that will be overlapped with this trade. So there is some risk there from earnings. Okay. So yeah, take care and good luck trading.